Hey folks, Gary Dean here with Sentiment Timing. This is our technical video report for Tuesday, March 17th, 2026. Happy St. Patrick's Day to everybody, and let's get started. So the past few days have been pretty much identical, where we're getting big moves within the first 30 minutes, and then we go nowhere. And it's driving me insane because we're looking like it could be a good trade, and then it ends up we just go within a dollar range bound for the rest of the day, and it absolutely crushes you. But let's just take a look at an overview, and I do apologize about the reports, the midday ones. I've been extremely busy with this software, getting everything going, and everybody in the trade room, same thing. I apologize because it's hard to do both things when you're battling with coding and trying to keep an eye on the markets and answering emails. And like I said, I do apologize. It's not it's something that will be pretty much automated real soon, I'm hoping. So let's take a look at the spiders. Big term, long term. We're holding it. This was our first accumulation zone. It broke it and went to the secondary. If they lose that, what I'm doing, I'm just moving the anchor down further on it. And you can see our next accumulation zone would be the 652.83 down to the 642.33 with our GAN and our secondary coming in at the 627.52. So right now we still, we're not really completely, I'm just going to zoom in. It's going to be pretty ugly. But you can see we're not really, we were, depending on what we're going to look at. This was that whole going through when we had the tariff tantrum and things just got destroyed. We're not really there, and we're kind of at levels that we could see a turn, but I'm leaving the door open. I'm sticking with, I think we're going to be in a very, very big chop zone, which probably could be anywhere from this 693.79 either down to the low that we made the other day at 661.14 or coming down to this low at the 653.04, because there's a lot going on, and geopolitical wise in the clowns that we have up on the hill, shutting everything down, and it drives me insane. Like, we need more chaos in our life right now. But in any case, I don't think we're going to get any major move up. I don't think this war is going to end. I think we have a lot of everything under control. Don't get me wrong. I just think it's going to be a little longer than what President Trump thought it was going to be. And if we see oil prices really start to skyrocket, then this market's going to have some issues. And the fact that oil's staying up near 100, it's a political risk for him. I can assure you that. I don't know if I agree with it. I'm not a big regime change person, because typically the ones that come in afterwards are worse than the one that we wanted out. So I'm not really too thrilled about this decision, but in any case, it's one of the reasons why I think this is going to continue like this for the next month and a half, where we're going to get some pretty big chop zones. But we may be having some pressure on the downside, and it's really going to be because of energy. So let's move on. Here we go. We have the 60-minute chart. If we're looking at our first distribution end, we came pretty close to it today. It's up at the 675.61. We don't really have any sell signals, but you can see duration right now is getting up into levels where we can see bigger moves on the downside. But you can see right here, this is the, hang on one second. I want to clear something off this chart. I have too many of these things up. Okay, let's do that. So you can see what we're really looking at is we have our duration that's getting up there, but this is the part that has me really believing that, they're going to defend this. Look at all this institutional buying right here. We had two different sets of it here. If you look down here, buying. We had a big divergence with institutional buying. So seeing this move with the spiders going from 661 up to 674 does not surprise me at all. And again, if you have this software and you're able to see this and you're able to just buy these dips, it doesn't really make make a difference. If the first buy signal came in at 664, and then we came to 661. So you say you're averaged in at 662 just on this. So you're taking it with each low, just because you know that we have institutions that are backing this drop right now. You can see that the divergences right here. So if you did it and you gave yourself a little bit of time on options, or say you took the ES, at the ES you're talking about 90 points you just made in 2 days on this. If you bought options, you're looking at 10 points. So again, you buy 5 options you spend $1,000, you just made 5,000. That's really the way that I look at this with it. Even though I haven't been trading, despite I made a trade today, and like I said, I was more I was just taking a quick trade, and ended up everything went sideways, and it crushed me. And you could see that right here. But if I was able to put 100% concentration into trading with this right now, instead of getting pulled in 20 different directions with the software, you make these trades where you see it and you just establish your position, give yourself 3 days, and next thing you know it, you're up $8,000 on one trade with zero real not risk, but zero stress at all. So again, if we had higher, here's our distribution zones. We got to keep an eye on the 675.53 and then up at the 679 area. So that would be, I think the bulls are going to be a little tired if they get up here, unless we get any really positive news. 15-minute chart again. If you're have the software and you're able to pay attention 100%. Look at these. Look at the way this was. So we had a big gap up. This is step one. Look where it gapped into, right in our primary distribution zone. So that's check one on it. Now go here and look what liquidation was doing. So I'm going to actually scroll this out more so we can see it. And you can see here, so our distribution topped here. We saw IWM heading, and it's heading down. And from there, I'm going to show you on a 5-minute chart where this setup was even better, where, you made the top, say you just got in here at 674. We made a low down at 669.80. So it's 4 points right there. Again, 2 contracts would have cost you $400. You would have, you could have made close to $800, $900, $1,000 on it. It would have probably even been less than that from here. But in any case, this is the move. It was planned out like that, where we were right into our distribution. We have liquidity moving down. We have a liquidity divergence here. And from there, it was pretty much all selling until we just went sideways. And that's pretty much where I got in right here, thinking that we're going to at least come up to the 673, and we did nothing. We stayed right there. So, but this is what I'm going to combine it with, where I'm saying when you have this, you basically can see what the move is happening right here. So here's our gap up. This gave you a buy signal. You ignore it. Any kind of big gap up or gap down, you ignore this. This is people just short covering, and that's all it is. But if we look at here. So here's your top right here on this candle. We're going up. Look what liquidity's doing. It's heading down. And even when we were here on this candle, where we continued up from 673.50 up to 674.40, we have liquidity going down. So that was not going to last. And then when you combine it, where we went right into the distribution zone on the 15-minute chart, and if you look at duration, that's backing this up too. So this, if you're, a trader and you're in front of the computer and you're able to see this, you pretty much knew this was happening on this right here, just because of you're looking at a divergence in liquidity right there. And that, even if you took this sell signal here on this one, you're still going from 673.21 down to, say you did the buy signal right here, 670. These are, they're great trades on it. But in any case, we started seeing buying. You could see it right here with these green dots. So here we had buying. We ran up to the 672. So, like I said, it's amazing how this stuff works, and how I came up with it, I have no idea. A lot of it was, going through chat and telling them what I wanted, and after a month and a half of doing it, we finally got it. And you can even tell by these candles right here. So if we're pulling back in the candles aqua, it means that institutions are buying right there. But I go by the signals and I really use my eye on it. But in any case, when it's heading up, this is a perfect candle. This means that they're selling on the way up. That's why it turned purple. So there's more sales being made at the bid than there are the ask, and that's why this purple, even though it was heading up, there was more trades down there on it. So anyway, I really have nothing to say what's going to happen tomorrow. We're flatlined right here. It could do pretty much anything. Our duration saying it can go up or down. Where we had, we're not really getting any signals from our liquidity indicators either. So tomorrow, I'm pretty much open-minded with it. So, let's take one more look at what we're looking at here with IWM. So did I change it? Hang on one second. IWM 5-minute. Yeah, so there's really not much else to do on this. I mean, the software did a great job. I lost, I think, like 800 on it, but it was really my fault because I was really waiting for when we were heading up here. We had duration, and I thought we were heading up to at least this. I'm sorry, that's the IWM. Let me get the spiders. So when we were heading up like this, I thought minimum we're going to the 673. We would have made $500, and that was it. But we just kept going back and forth. But this, so we do have all of our packages out. We have our new landing page. You can, if you're interested. The liquidity package you're gonna get these signals. You're gonna get these two indicators. That's $2.99. If you want to do just our regular institutional pivot matrix, what's going to give you your institutional buy and sell zones, as well as our duration monitor and our signals, that's $2.99. If you're looking for the whole package, which I would recommend, because like I said, you can have these indicators in front of you and make one trade and pay for your lifetime license in one trade on it. And there's a lot of examples that were just given right now. So that's going to be $4.99. That's a package on it. But like I said, look these over. Watch the video. Look where these when they're actually giving you divergences, because it's one of the most powerful things I've seen. So with that, enjoy your St. Patrick's Day, and I will talk to you guys in the morning.